Hi, class. This is our first lecture for Finance 3020, Essentials of Managerial Finance. What I'd like to begin with is to talk to you a little bit about why would you want to study in finance. Um, Obviously, you'll see this slide. It talks about the basic areas of finance. There are three real major areas. There's corporate finance, which would be working for a major corporation like Coca-Cola. Investments, that's where you might be with a wealth management firm like BlackRock, Merrill Lynch. Financial institutions, you really can get into like banking, insurance companies. Just like the local Regions Bank has a lot of opportunities there. Now, each one of these fills both the domestic roles and international roles. So, international finance is really just a broader look at all of those first three basic areas of finance. Uh, Now, a lot of you taking this class are not necessarily majors in finance. So, why study finance even if, maybe you're a marketing major? Well, if you're going to be a marketing major, you may be looking at a big budget for one of the major advertising firms in the country, and you're going to need to know a few different things. You're going to have to be able to figure out pricing levels for products, distribution channels, essentially. All sales are tied to marketing, and you also need to understand the compensation structure and how everything works so that you make sure that your campaign is going to make money for the company. What about accounting? Well, obviously, there's a lot of overlap between accounting and finance. As the world gets more complicated, we're going to definitely get more new tax regulations and all kinds of other regulations. And the folks in accounting, it's your job to understand not only the rules but the financial implications there, and and how they might play into developing new types of financial contracts and whether or not those contracts are being used or abused. Uh, what about management majors? Well, finance is usually the key ingredient to any business strategy or plan. So, you know, if you're not gonna, if your plan doesn't make money, then you can be the best manager in the world. But I mean, unless you're a not-for-profit charity, that's going to be a very difficult plan to sell to everybody else in your company, especially your shareholders. Um, so, regardless of your major, and there's other majors out there as well, you can find a reason why you really need to study and learn and become proficient in finance. However, I would say the most important reason for all of you to study finance is for you. You need to understand all of this because all of this finance should play out in your life. You will come across 401k plans, IRAs, Roth IRAs, 529B plans, HSAs, FSAs. You might want to create your own LLCs. You're going to have to deal with insurance, Medicare, hopefully not too much with Medicaid, Social Security. There's a whole lot of in this world that revolves around understanding finance that can really make your life better if you come in having an idea of what it's about, and if you really understand the time value of money, which is a big topic in this class. So I know that we haven't gone past this slide, but I wanted to let you know that there's a lot of reasons for you to be interested and motivated to take this class very seriously. um, there's also some big picture ideas. Right now, for example, we are the world's reserve currency, but that may change. What happens if the dollar is no longer the world reserve currency down the road? We've seen what's been fluctuating with oil. What happens if oil prices are no longer marked in U.S. dollars? Would we see changes in inflation? Hyperinflation in areas like more so in education and healthcare. Um, there's a lot of macro and micro issues to that you would understand better if you understand finance. And so, with that being said, I'd like you to take this class very seriously. Small changes in your budget and even the government's budget could have huge effects on your life. So now that we've said that, let's take this slide a little bit more seriously. Corporate business or corporate finance, what is that? Some people call that business finance. That's really the main focus of this book and of this course. if you go into finance as a major, and I hope many of you do, you'll notice that there's really kind of a split in a lot of finance majors between a focus in either corporate finance or in investments. And investments deals more with stocks and bonds and other financial assets, learning about risk and return and portfolio management. And you may see a portfolio manager or a stockbroker or a stock analyst, a financial advisor, credit analyst, all kinds of roles, particularly within investments. Whereas in corporate finance, you're looking more as, maybe working your way up from like a financial manager all the way up to a CFO or a CEO position. Financial institutions obviously deals with banks and insurance companies and other businesses that deal primarily in financial matters. And there's a lot of jobs, a lot of starting jobs actually in some of those companies. And then with international finance, we're talking about specialization in one of the other three areas above. And so really you would not want to just go into international finance, but you would maybe want to go into international finance and investments to where you really had a desire to take your investment skills internationally or abroad. Same thing's obviously true with corporate finance, whether you wanted to, maybe go and work in China or work with other companies around the world to kind of bridge that disconnect between different countries. So there's also a lot to deal with exchange rates and some other information there as well. So if I could draw a box and put a big D in it for domestic, I would put the first three basic areas of finance in that box. And then if I drew a bigger box around it, I put an I in that box, and that would be international. Now, international and domestic both have the first three. Okay, so once again, just wanted to help you understand where everything fits as far as finance is concerned. Moving on, if you look, there are three specific sections of financial management decisions: capital budgeting, capital structure, and working capital management. Capital budgeting is really concerned with long-term decision making, especially with long-term assets and liabilities. You're talking about plant, property, equipment. You're talking about long-term loans. They're also very concerned with making sure that the projects they choose will create a positive net present value for the company, or another way of seeing that is that the gain will be greater than the cost. Managers here have to be very concerned with cash flow and also with the risk involved with any long-term decision. Capital structure, on the other hand, is more about looking at debt versus equity decisions. So we're looking at just the right side of a balance sheet. Remember that a balance sheet is half, on the left side is assets, on the right side is debt and equity. What we're looking at here is how do we pay for all of the assets that are on the left side? Well, they have to be financed either through debt or equity, and how you decide that, what percentage of makeup between debt and equity, is really your capital structure. You can kind of think of this as a pizza, or a pie chart of, and if you've got a certain percentage of your pizza that you want to be pepperoni and a certain percentage of that pizza you want to be supreme, you want to know what percentage that might be, and it could be half and half, or it could be all equity, or probably not all debt, but nonetheless, how that is made up is there's a lot of decisions. One of the things you have to ask yourself is, how much debt can we afford to borrow, and is it the best source of cash? Are there opportunities, for example, to buy back a lot of stock? Right now you see that happening with the interest rates as low as they are, that a lot of companies are buying back their stock with cheap debt. So there's a lot of really important questions that you have to talk about with the capital structure of a firm, and we will get into those later in the class as well. Working capital management, this has to do with the short-term day-to-day decisions that a firm will make. Some of the decisions here are how much inventory do you keep on hand? Are you wanting to move more towards a just-in-time delivery model, or are you trying to store up inventory for potential strikes from suppliers, or just to have extra inventory on hand? Are there some strategies there? How do you handle the situations with, do you provide financing for your customers, or must they pay in cash? What about how you finance your own purchases from your suppliers? Are you getting some kind of a bonus if you're paying up front, or are you just paying cash up front and not getting a bonus for doing that? So once again, working capital management has to do with short-term decisions for assets and liabilities, whereas capital budgeting is more about the long-term decisions.